Welcome to an episode of Money 101. We haven't done an episode on this in a while, but today I got amped up and motivated to make this episode because of something crucial that happened to me this morning, okay? So on this episode, I want to talk about why accounting is one of the most deadliest skills when it comes to money management, okay? Maybe I should quote that title differently because people might think like, what deadly skill? I probably shouldn't have that. Okay, probably the most powerful skill to have when it comes to money management for your business and then also for your own personal finances. Okay, so the reason why accounting is one of the most powerful skills ever out there and one that everybody should have, not just the business, but also yourself as an individual, because, well, you are a business, right? You give value, you get paid for it, you get that cash into your bank account, you spend that money. And if you do not know how much money you put in and how much money you took out, especially the taking out part where a lot of people don't take a lot of detail into, then you're really going to be in a very, very tough position. Because literally, most companies that end up becoming big or ended up actually surviving is they had a very good accounting team. Without a good accounting team, your company will probably go to zero because you'll just be looking at the end of the month statement and be like, it looks good. And that's what most people do for their own personal money management. For me personally, when I look at accounting, and I'm looking at it from a basic point of view, right? You have to understand what money coming in and what money going out. The different categories of that money. Was it entertainment? Was it gas costs? Was it house bills? Was it whatever? What kind of costs were you having in your bank account, okay? And then you have to look into those statements. Don't just look at the end of the month statement and be like, it looks about right, or whoa, it looks bad. Well, look into it, okay? If it looks bad, why does it look bad? If it looks good, why does it look good? Follow the money, okay? Accountants follow the money. They follow the trail and understand where it came from and where it ended up to and why the heck did it end up there, okay? So this is the reason why it was very powerful for me this morning, okay? This morning I was like, whoa, I am like, cash is coming in, but I'm not seeing it on the other end. What's going on? So I had to go into the books of the company and look at the centerpiece, look at the middle part where that road, that journey the money is having and what's happening. So in accounting, you want to think about this for a second. It's kind of a cool way, neat way to think about it, okay? Your money is literally taking a journey, right? It's come from you getting paid, you got your paycheck, and now your money is taking a journey in your bank account. And in your bank account, it's the part where it's kind of the woods, right? There's so many different statements are happening, so many different transactions. It's like the forest of the journey. And then after it just goes through that journey, then poof, pops out at the end of the month, and it becomes your end statement of your bank account. Now, too many people don't look at the forest part because they're like, oh, that's too complicated. I'm not an accountant. I don't want to look at that. And this is the part where a lot of people don't end up building wealth, or they end up basically never really quite accumulating growth of their capital. Because this is what basically happened. One of my friends, okay, I was talking to him, and he was like, dude, I just increased my income last month. Okay, and I was like, dude, that's awesome, right? Because he started doing different things with his car services and stuff. I was like, yeah, it's making me money. My income is growing. I'm like, dude, that's awesome. And I'm like, okay. Your income has grown, but how much money did you keep? He was like, man, you see, I've been eating out. I've been doing this and there. And he was like, I don't know where the money went. I'm like, okay, so you basically worked hard and you got more of an income and you blew the money. I was like, dude, you're just basically at the same place you started because it doesn't matter, okay? Because here's the thing, you can increase your income, but if your accounting is not right, you've really not increased your income. You just increased your expenses with the income. So you're not really closing the gap. You're living the same gap, okay? That's why, unfortunately, there's some people who are doctors and who still live paycheck to paycheck because they ended up getting a huge influx of income and their luxurious spending went up with them. And that's why you need an accountant to be able to look in the books and be like, why did you buy this again? You're like, I don't know. I felt like in the moment I should buy it. Those in the moment stuff is what ends up kills you. And this is why in accounting, when you look at your books for your business, your personal finances, you can be able to actually tackle those things in and be able to be like, did I really spend money on that? And that's when you start getting eye-opener, okay? I know a lot of people love to eat out, and they never really quite realize how much that accumulates. Because when I was talking to the same friend of mine who increased his income, and then we started looking, I looked at his books, I did like for a few seconds, and I was like, dude, if you cut back your eating and spending out on these different things, that money could literally compound into $50,000 years from now. He was like, what? just cutting back on a few places I'm eating out here could accumulate to that much growth? Yeah, duh. Because at the end of the day, compounded growth is what's another key part, which I don't want to talk about compounded growth in this episode. I'm just trying to show you a glimpse of you being able to just twist your budget and cut back on your expenses by 20% can have a major impact on how you end up managing your money. So the reason why accounting is one of the most powerful skills ever is because it literally does not matter how much money you're making. What matters is how much money you're keeping. And a lot of people do not look at their accounting personally. They just basically make income and they spend the money and they look at the end of the month balance and be like, it looks good or it looks bad. And they don't investigate why does it look good and why does it look bad. You need to stop just looking at the journey of your money at the end of the bank statement. The people who build wealth, it's not because they're crazy smart. It's because they literally know how much money is coming in and how much money is leaving out. And what money is leaving out and why is it leaving out? It's your money, man. You gotta look at your money as friends, okay? Why is your friend leaving? Is he going on a journey to come back and bring more friends? Bring more money, if you get the hint. Or is the money just leaving and going to do other things? You work hard for that money and the money's like, I'm leaving. I'm like, why? Well, you're spending me on eating out. I need to go get money for you to eat. I'm like, I don't really need to eat out so much every week. So you know what? Just stay here. We'll just only go out when it's special occasions, okay? That's kind of how you want to treat your money. Like, you don't have to spend money all the time, okay? You don't have to always spend money all the time. Your money's supposed to be working for you. And if you're telling your money, look here, guys, number one rule from Warren Buffett, right? Number one, don't lose money. Number two, look at rule number one. So why does he care about you not losing money? Very simple. Because when you spend that money on eating out, you're never going to see that money back again. But if you invest that money, you have a chance of that money not only coming back to you, but bringing more money with it. So that's why accounting is very powerful. Because if most of your spending is going out towards things that you'll never see back again, okay, then you'll not be able to really propel you to be able to increase your, not income, but increase your actual wealth building, your wealth whale, whatever you want to call it, okay? And that's why accounting is very powerful. I can literally rant for 20 more minutes on why accounting is powerful. But at the core of it, I just want to tell you that, look, I know I was rambling in this video a little bit because I was trying to piss different points of how accounting is very powerful. And kind of using different things we've talked about in the past and kind of mix them together. But at the end of the day, here's the core part that you just want to pull out of this crazy video, okay? Accounting is powerful because you'll be able to understand why you're spending money and where you're spending money, when you're spending money, and etc. You have to answer those questions. When you understand those questions, you can be able to sit down humbly and ask yourself, do I really need to be spending money on those different things? Do I really need spending money on this and that? Because you will end up realizing that most of your expenses are usually things that you don't need. If you cannot, here's the trick of the game. You have to find a way to be able to live on less than you actually make. Because when you try to live on more than what you actually make, you end up going in debt. That's when you end up needing to borrow money. Now, if you end up living on, let's say, a little bit slightly on that percentage there, then you basically end up being on a paycheck to paycheck place. The key goal is for you to go as far away as you can from the paycheck to paycheck. And for you to leave that, it basically means that you have to humbly and accept when you get a bonus when your business increases profits, or maybe let's say when you get a bonus at work, you have to start thinking about how can I be able, instead of me increasing my expenses with the same percentage I got my bonus, which basically means that bonus gets eaten up by your expenses, you want to think about how can I be able to keep as much as the bonus as I can and still be able to celebrate and have fun. I'm not here trying to be a downer and be like, hey, look, don't have fun with your money. I'm not saying that. I'm just saying, just be careful not to have so much fun that when that job goes away, when the business is not doing well, when the month is not well, you have an unexpected expense, you end up having to borrow money or doing something that'll end up putting you in the worst position. That's basically what I'm trying to say, okay? That's why it's very important if you look at your accounting. I hope I made sense in this video. I don't know. I feel like there's so many different elements that I've been able to learn, and I'm trying to summarize. It's 2 books that I was reading, Profit First and Scaling Up, and I'm trying to piece those together for personal use and also business use. But the good gist here is basically know where your money is going. That's it. Yep, summarized it. Know where your money is going. That's it. And once you know where the money is going, ask it why you're going there. And if it's not supposed to go there, take it to go back in your bank account or tell it to go work for you and bring more money back. Okay, that's basically it. Okay, don't spend your money blindly. That's the summary.